What up, people? Welcome to the Finance Rebel Show. I'm Kamara Yellows, your Finance Rebel, and today we are going to be talking about the new updates to the IRS. In particular, today's show is titled, Is Joe Biden Going to Destroy Taxpayers? As many of you have seen, the Senate and the House of Representatives have voted into almost law, almost law, have voted into almost law this new Inflation Reduction Act, the Inflation Reduction Act of 2022. And in that bill, there are a lot of new updates, a lot of new funding for the IRS, the Internal Revenue Service. And honestly, it has a lot of people worried. So I wanted to come talk about this real fast. I've seen a lot of newspaper coverings stoking up the fears. We're seeing the political gamesmanship on both sides of the aisle, the Democrats and the Republicans. But I figured I would come and give you some context because this is what I do almost every day of my life for a living, right? Again, I'm Kamari Ellis. I'm a tax accountant, been in tax and investments and financial services for the last 20, 25 years. So, and I probably have about 30 tax seasons under my belt. So I figured, why not come and give a little bit more context on this? Because I know a lot of people are really worried about this. A lot of people are antsy about it. A lot of people are coming or thinking that the IRS is coming and kicking your door. Because I know I saw an IRS article, an article for the IRS hiring for armed enforcement agents. But we'll talk about that a little bit further as we get into this broadcast. Now, if you enjoy this broadcast, if you enjoy the channel's all about money, taxes, business, do me a favor, share, like, comment, make sure everybody gets the word about this coming out, all right? So this is going to be short and sweet, y'all, real short. I even put together a slide screen for y'all, a slide presentation, because again, I wanted to be short and sweet and concise and to the point. All right, so let's get right at it. So, as everybody knows, the IRS is adding 87,000 new IRS agents. Now, that's not happening today. That's not happening tomorrow. This is going to be over time, right? This new bill that's coming is going to be implemented over a span of 10 years, but I'll definitely get into that as well. We'll definitely get into that. So 87,000 new IRS agents that are coming on board, right? Now, you're wondering, where is this money coming from? So there's approximately $80 billion that the IRS is going to receive in this new package. By the way, I'm seeing that someone said my volume is low. Let me know if that's good now. Everybody put a 1 in the chat if you can hear this. Everybody put a 1 in the chat if you can hear me. Let me move directly to the mic. So let me know if y'all can hear me. But as we keep going, right, there's going to be roughly $80 billion going to the IRS. And again, a lot of people are worried. A lot of people are scared of the IRS. They think that the IRS is the big bad wolf, and they're coming to steal, kill, and destroy all of your wealth, all of your money. A lot of people are worried about this new 1099K requirement, the $600 requirement, because a lot of people are making money on Shopify, Amazon, eBay. They're getting these 1099Ks for all the amounts over $600. I'm here to tell you that's part of it, but it's a very, very small part of it. It's way, way bigger than that. But let's go through this, and I'll come back and lay it all out for you, right? So there's $80 billion that's going to the IRS in this new package. $46 billion is going to enforcement. $25 billion is going to operations. $5 billion is going to new equipment. $3 billion is going to taxpayer services. You're probably like, wow, that's a lot of money. Now, If you haven't been on hold with the IRS for a while, you might not understand. If you have called the IRS, you might have a little bit more understanding and context. Now, why all the money? Why all of the money? So I want to show you something that I did earlier in some of my coverage of the IRS. So let's check out this real quick. All right, hold on, y'all. Hold on. I did something wrong. I've been having technical issues all morning. So let me try this again. Let me try this again. My apologies. I had all this stuff queued up for you. All right, let's try one more time. One more time. Let's see here. So yeah, you can hear me. Let's try one more time. Give me 1 second. Un momento. Running a show live can be definitely challenging. But it's all good. It's all good. Here we go again. Here we go. Let's see. Among the lucky 1 in 9 callers were able to reach a CSR. The IRS reported that hold times averaged 23 minutes. Not for me. They're usually higher. Now, I want to be clear, right? This is a previous broadcast. This is a previous recording that I did covering all the new updates in the IRS with the IRS, right? And I wanted to go over what a lot of the issues are because people don't understand why this money is so important. So in this clip, I'm breaking down hold time. There was over 280 calls to the IRS. Roughly 11% of those got answered. Hold times are horrendous, but let's go back to it and I'm gonna break it down real quick. And I'm a tax pro. I got a special line. And practitioners and taxpayers have reported that hold times were often much longer. See? And frustration and dissatisfaction was high throughout the year with the low level of phone service. All right, I think y'all get the point. We are totally it's going to be rough, y'all. It's going to be rough. Now, in this clip right here, I want to talk about Aaron Collins. Aaron Collins is the chief of the Taxpayer Advocate Service. What is the Taxpayer Advocate Service? Taxpayer Advocate Service is the watchdog of the IRS. While they sit inside of the IRS, they're totally independent of the IRS, and they're there to report to Congress. Now, remember, I always tell y'all, Congress is the IRS's daddy. All right, Congress enacts the laws that the IRS has to follow. So keep that in mind. But in this report, well, actually, it's not a report. In this interview that Aaron was in, she talked about the amount of money that's allocated to the IRS and what they use it for. So check this out real quick.
So the challenge, though, is the IRS, some of their technology is outdated, and their staffing has been reduced over the last decade by about 20%. So if your staffing has reduced, your budget's been reduced, we're putting a pretty high pressure on the IRS. They've been doing a remarkable job, but the concern that I have in representing taxpayers is at what cost? Because you got to prioritize and something's got to give. And the challenge is what we're seeing is a lot of the individuals that are responsible for processing the tax returns, answering the telephones, working with taxpayers, they are stretched very thin. And as a result, taxpayer service is suffering. For example, the phone lines. Last year was very difficult, and unfortunately, this year is not much better. Congress typically funds the IRS to be responsive 6 out of 10 calls, in essence. Personally, I don't think that's sufficient. I like to see the IRS funded to answer 100% of the calls. But this past year and the current cycle, we're seeing there are days that it's less than 10% that those phone calls are being able to be answered. And that's due to an increased high volume of calls coming in. And again, the challenge of having remote workers who are the ones responsible for answering those.
Now, y'all heard her. Congress is usually funded to fund 6 out of 10 calls. But Congress has only been, the IRS has only been able to answer roughly 1 out of 10 calls, roughly 10%. So this is a major, major issue. And so I'm just reading the comments here. So, all right, Self-Made SM said they can hear it. Clip of your live is still low. Okay, all right. Well, we will scrap the clip for right now because it's not working. It's not working. So, again, a lot of what's going on with the IRS has been underfunded and understaffed for decades, right? A lot of the IRS's infrastructure and technology goes back to the 70s. And many people don't realize that the IRS has many, many different systems that are not coordinated and they don't talk to each other. So all the times when I'm calling the IRS, doing research for my clients to get information on their tax bills, their installment programs, any outstanding information that's needed to be filed with the IRS, they have to go and look in different systems. So there's no coordination. Not to mention all the many different departments that the IRS has. So a lot of times it can be very, very, very hard calling up the IRS. And I'm a tax professional or a tax practitioner. For the public, it's totally unbearable. A lot of times, matter of fact, I got a call from a friend of mine 3 days ago, multiple LLCs, a lot of real estate holdings. They can't get through. Every time that they call, they get placed on hold and they were getting hung up on. So it's been really, really challenging. So a lot of people are wondering again, why even put up this money? Why spend this money? Is it worth it? And again, because of the rhetoric, especially on the right, a lot of people are like, it's totally not worth it. Totally not worth it. But I want to show y'all something. Everybody knows that the IRS has been having mailing issues, right? And so when you look at this, I want to show y'all this real quick. When you look at this, you'll see part of the reason why it's really important that people, us, taxpayers, the government, start to fund this properly. So this is a opinion post from the Washington Post, or an opinion piece from the Washington Post. Caption, opinion. Why does the IRS need $80 billion? Just look at the cafeteria. And so when you see the cafeteria, that's mail, that's processing, especially for back taxes that have to be manually processed. Again, because when people mail docs in, the IRS doesn't have a way to scan them in and work on them on computerized methods. They have to work on them with paper. Any of y'all tell me if that makes sense? Any of you tell me if you feel that this is efficient? Can any of you tell me if this is a good way for taxpayers to experience their tax returns getting processed? Now, many of us can say, hey, why pay taxes at all, right? So if you're one of those, what do they call them? Objective, conscientious objectors that don't want to pay taxes, this isn't the show for you. Why? Because I'm a black man in America and I don't need to run away from paying taxes because they like to lock us up far too often. I don't need to add another thing to the list. I don't need to give the man another reason to come knocking on my door. But look at this. This is their cafeteria. And mind you, this is just one cafeteria. This is the cafeteria in Austin, Texas. There are other campuses around the country that handle tax return processing. This is just one. Mind you, a few of these campuses have also been shut down. So keep that in mind. Keep that in mind. COVID has hit the IRS really, really hard. The Great Resignation, as a lot of people are calling it, has hit the IRS really, really hard. That just gives you another look at what's going on here. So again, as you have context, it kind of makes sense. Now, just to read this first part, I don't want to bore you all too long. It's part of what the IRS calls the pipeline, a 1970 era assembly line used to process tax returns at several locations around the country. And it might give you a sense of why Congress is on the verge of handing the agency $80 billion through the Inflation Reduction Act, not only for more enforcement, but for also tech modernization. As of July 29th, the IRS had a backlog of 10.2 million unprocessed individual returns. Blame the pandemic? Sure. But also the agency's embarrassingly outdated paper-based returns, which leave stacks and stacks of return cluttering shelves, hallways, and even the cafeteria. So, when you see this, that's not good. It's 2022, folks. It's 2022. The IRS is still handling taxes by paper. Now, I started doing taxes with my dad back in the 80s, 85, 86, 87, somewhere around there. We were doing taxes by hand, by paper, and using mimeograph paper. The IRS isn't too far from that time. Talking about 85, 86, 87. That's sad. That's really, really sad. So, again, when we look at what's going on with the IRS, why the money is needed, everybody's wondering if the IRS is going to come knocking on their door. Again, there was a wanted ad section that a lot of people were worried about because they were recruiting for armed enforcement. Now, again, people ran with this. We know how the internet does. they ran with it, and it's just hilarious. But I want to show you this one ad, and again, I want to give you some more context to it, because yes, the IRS is hiring. The IRS is hiring 87,000 people. Yes, the IRS is hiring criminal investigators empowered to use deadly force. But here's some context. Here's the context. They've always had enforcers who can use deadly force. The IRS often works hand in hand with the FBI, DEA, alcohol and tobacco task force. They work with all of them, all the alphabet boys and gals. They work with all of them. Yes, sometimes they're going after criminals. So yes, they need protection. It's not new, but again, the IRS and the internet they don't work hand in hand, because a lot of times people love to exaggerate things. Love to exaggerate things. So that's just one part of it, right? So you see why the IRS needs funding. You see why the IRS needs money. Now, y'all put in the comments and let me know, one, if you understand why the IRS needs money. Two, you don't understand why the IRS needs money. All right, so here's the other point, right? Who is going to be impacted by this? So again, the newspapers are running and saying all the middle class people are going to be impacted by this. The people in the middle, because we know the majority of audits happen to poor and middle class folks. The majority of audits are what's called correspondence audits or mailing audits. And what happens is a lot of times people get the notices and they just accept whatever the IRS says, or they ignore it. And once they ignore it, it's put into the record, and then the people owe the money. And sadly, a lot of times, not a lot of times, when you look at IRS interest and penalty rates, they're very expensive. Very similar to what goes on with a loan shark. But again, everybody's saying, hey, the IRS is going to start targeting more and more people, again, with the 1099Ks, 600 and above. Well, that rule was kind of already on the books. Whether you get a document from what's called a third-party network or not, if you are a business owner, if you're making money selling products and services on an eBay, an Amazon, a Shopify, you're still supposed to report it and pay tax on it, potentially, right? And remember, you don't pay tax on the whole amount that you made. You only pay tax on the net. That's the part that's left over after you paid for your products, your materials, your supplies. If you have to drive back and forth in your vehicle, you get to write off the mileage. If you haven't seen the latest video I did on that, that's also up on the YouTube channel as well. Check that out because the IRS just increased mileage rates. So you want to use all of your tax deductions and you can keep your tax bill down, ideally. But the other thing with that whole bill or with that whole new enforcement for the $600 is it's not for friends and family. It's only for business transactions. But again, media, people don't like to read. People get a little silly at times. And so they get up in arms, they get worried, they get frustrated. And then so they start going all crazy. So keep that in mind that this bill, this enforcement isn't for the middle class and the poor. It's really for everybody, to be honest. It's really for everybody because there are a lot of people who don't want to pay taxes. Let's just be honest. There's a lot of people in what's called the under economy. There's a lot of rich folks who like to use all the loopholes and like to cheat. Namely, the orange monkey who just got raided in Florida. Sadly, people don't look into the context, though. So I wanted to find another article. I couldn't find one that talked about all this enforcement. But here, I think I do have one. All right. So again, everybody is making speculation. Everybody is kind of up in arms and they're saying, hey, the poor are going to get hurt. Not so much, especially if they are doing what they're supposed to do. But we'll get to that in just a second. And it seems like all my tech, all right, there we go. All my technology is fighting with me today. So I wanted to show you this one thing without the ad. I'm so tired of ads. But here it says, CBS ran this article. The IRS wants to spend billions on enforcement. Here's who is most likely to get audited. So it says here, make more than 100,000, your IRS audit rate just doubled. But guess what? Does anybody know what the audit rate is now? The audit rate now is probably about 0.0001%. So if it doubles to 0.0002%. I say all that to say that audit rates, while they are going to go up, it won't be a crazy amount. Not at first. Now I'm going to get into a little bit more about what I believe is going to happen as they start to implement new agents, new technology, and how you can deal with it. But I think, again, a lot of the reporting is drastically exaggerated. So I wanted to show you this here. That little lady there, Janet Yellen, the former Fed Reserve chairwoman, also the current Treasury Secretary. Now, what is the Treasury Secretary? The Treasury Secretary is the left hand or right hand person that helps the president of the United States run all the money in the country. They handle the money. The Federal Reserve is a separate organization, but for all the fiscal things, tax collection, the Treasury Secretary is the head of that. Then you have the IRS Commissioner and everything else. So the way it flows is Congress, Senate, President enacts the laws. That's who enacts the laws. The Treasury Secretary oversees all of those other things. IRS then interprets what Congress and the President wants, and that's what becomes law. Now, when you look here and you look and see what Janet Yellen, who is the Treasury Secretary, she says Yellen tells IRS not to increase middle class audits if getting more funds. Well, she's the boss, right? If you really think about this, she is the boss. So it's not just about targeting the middle class. It's more so about having a more efficient organization so that when you, the taxpayer, call, you can get through. When you, the taxpayer, get a notice, it's not an erroneous notice, which the IRS sends out all the time. The IRS sends out erroneous computer-generated notices all the time. So with better funding, with better technology, that won't happen as much. But again, people don't want to talk about that. People don't want to look at, or I'll say media. Media oftentimes does not want to look at all of those things that happen. But there were several million of, let's see here, notices that went out to taxpayers that people didn't realize was an error. Math error notices, what you need to know. As of April 7, 2022, the IRS has issued 9.4 million math error notices, and a lot of them were wrong. Let me just blow this up here so everybody can see it. 9.4 million. Now, a lot of that had to do with what happened with the STEMI checks. Because a lot of times people weren't issuing them properly on their reports. They were, on their tax return, they were not reporting them properly. But a lot of times they were wrong. And so again, there's all kinds of problems with what's going on with the IRS. People don't really realize the intricacies, the nuance, the details that go on there. And they just say, oh, the IRS is the big bad wolf, and I don't want them to get more money. But again, them getting more money will help the overall taxpayers. Shouldn't have mail in the cafeterias. Shouldn't have over millions and millions of mail going out to taxpayers in error, right? Shouldn't be any of that. So you want to keep all of that in mind. Now, what can you, the taxpayer, do to stay out of harm's way, right? Because as I see this going forward, there's going to be some hiccups. There's going to be some growing pains, just like it is in any organization. The IRS, again, just sent out 9 million erroneous letters. What do you think is going to happen when they start to switch over systems, start to upgrade systems? They're hiring 87,000 people. And again, that's not happening today or tomorrow. That's happening over time. What's going to happen? Now, keep in mind that $80 billion that they're getting, it's not coming today. It is coming over the next 10 years. So those improvements are going to come over the next 10 years. But the IRS is hiring. From what I understand from some of my sources, they were also having a hard time keeping people on staff. They're coming in, they're getting hired, but they're not staying that long. Many people are getting a job for a couple of weeks and then they're quitting. So it's a little rough. Chuck Reddick, who was the current IRS commissioner, has said it's really hard to recruit when Target and Costco are paying $20 an hour. So for a lot of those lower wage jobs, they're having a hard time. They're having a really, really hard time. But I believe they'll get there. I believe they'll get there. But again, as you start to bring in all these new people in the system, what's going to happen? You're going to have some training errors. You're going to have some people that make some mistakes. Not to get overly confused with just total ignorance, with total malfeasance. It's just a training error. The whole playbook for the IRS is open to the public. You know what you can do. There's a lot of tips, tricks, and techniques that you can employ, but you got to know what you're doing. That's why I recommend everybody that's having IRS troubles, tax troubles, to work with a professional. Now, as you begin to see more technology implemented, we'll probably see some of those issues as well. So my guess is it'll probably get a little worse, especially in this upcoming tax season, before it gets better. But I also believe it will be better. The money is needed as we go on and on and on into time. As we get older and older, it'll help create a smoother system. Hopefully, hopefully, prayerfully, that's what I believe. Now, in the interim, this is what I believe you should do, right? What can you do now? Keep good records, especially if you are a business owner. If you are a business owner, you want to keep really, really good records. You want to have a bookkeeping system. Why? Because the responsibility to prove your expenses and a lot of times your income will be yours to prove, not the IRS's. The IRS will get their documents from their sources, from the banks, from employers, things like that. Sometimes you have to disprove them. Sometimes they're correct. But at the end of the day, you really want to be organized and you really want to have all of your documentation in order. You want to have it in order because it's going to save your butt. Now is the time to get organized if you're not. You can do some simple things, right? If you are a business owner, make sure you have a bookkeeping system. Pen and paper, Excel spreadsheet. QuickBooks is what I use and recommend to my clients. Some people use Xero, but whatever it is, be dedicated to it and use it often, early and often, right? Get to know it, get comfortable with it. If you don't have a business and you are a regular smuggler, 9-to-5 employee, make sure you're paying attention to your withholdings. Make sure you're withholding enough money out of your check every week or every 2 weeks or every month, how often you get paid. Make sure that's done properly. Make sure if you need to see, if you have more than one job, the IRS has what's called an estimated tax withholding calculator. Just Google that. You can go on and see if you are on track. But now is not the time to kind of play around and be lax. A lot of you who like to play the exemption game, don't play that. Don't play that no more. I got a video coming talking about the real perils of playing the exemption game. You'll see that probably next week, maybe the week after next. But you don't want to do that. You want to be organized. You want to make sure you have everything put together as much as possible. All right? And again, work with a tax pro as much as possible, right? File your returns. File your returns. File your returns, people. If you haven't filed in a while, please file now. The IRS usually wants you to be what they call in compliance. Last 6 years of tax returns, they want you to have filed. If you have a filing requirement. So if you normally made over 12,000, 13,000 in a year, you typically have what's called a filing requirement. Now, if you made less than that, most times you won't have a filing requirement, but that can get a little bit tricky, but just make sure to file. A lot of people don't realize this, and I've been meaning to talk about this for a while. One of the ways when people get audited, right? Well, let me back up. Let me talk about the process of auditing. Most audits are random. You get picked random. Sometimes the IRS might be looking for a certain thing or a certain industry, but typically you get picked randomly. And so when you get picked randomly, and I talked about the chance of that happening. Now, if you are picked, you got to go through hell and high water to prove that it's not, or you have to go through hell and high water to make sure that all your expenses are accepted and everything else is on the up and up. You can win an audit. What it takes, though, is to have good records. But again, most times audits are random. Now, there are other times when audits occur when people draw what everybody likes to call a red flag. When you might have reported something that was totally egregious, totally crazy. You have a hair salon, you made $10,000 and you reported $100,000 in meals and entertainment. Well, entertainment's not a write-off anymore, just meals. Don't you think that might draw some extra scrutiny? All right, so that's one of the ways. The other way, a lot of times people get scrutiny or get an extra look is when you haven't filed in years, 2, 3, 4, 5, 6, 7, 8, 9, 10 years or more, usually less. Like I said, the IRS usually only wants 6 years. Sometimes it makes sense to file more than that, though. And then all of a sudden you file these returns. I've had it happen to clients. It draws a red flag, especially if the IRS feels there was some criminal intent to evade taxes. So again, you got to be sure. You got to be sure that you don't want to get caught up unnecessarily. So again, I would suggest to everybody, if you have back taxes, file your back taxes now. File them now. Also, get in the habit of filing your taxes on time. You don't want to dilly-gag. You don't want to wait. Again, I already told you what my predictions are. I think as more people come on, you're going to have more training incidents, more issues of training. As systems come online, you're going to have more instances of system problems. Systems not talking to each other, people not understanding how to work the system, all of those things. So you want to file your stuff in order. You don't want to get caught up in that trap, all right? And if you do owe money and you can't pay it off now or within the next, I believe it's 90 or 180 days, get into an installment agreement. Get into an installment agreement so the IRS can say, oh, this person is trying to work on getting in compliance, paying their tax bills. They're not trying to be a tax slouch, right? So again, make sure that you're paying your back tax debt. It's important. It's important. By the way, the IRS will have you in a totally up-to-date installment arrangement or installment program. They have sent notices telling people that they're not in compliance or they've broken the agreement, and the client or the taxpayer has not broken or not missed any payments. None. Have not missed any payments. If that happens, keep making your payments. The IRS makes mistakes, but the IRS is not necessarily out to get anybody. I know a lot of things used to happen back in the day. It was the Wild Wild West. Those people were just really trying to do their jobs, go home at night. They're not really looking to give anybody pain. That said, they're still human. They still have bad days, right? So there are times when I call them up, the IRS, and it's not that sweet. But yesterday I called, had a wonderful relationship with one of the IRS reps. Gold star for that lady. So again, it's people doing their jobs, looking to follow the law, follow the regulations, and they're not looking to do anything untoward to you per se. All right. Now, here's another thing a lot of people like to talk about, right? You probably all heard that commercial. If you owe more than $10,000 to the IRS, you can qualify for the Fresh Start Initiative. And what they're talking about is offering compromise. And Fresh Start is a real thing. It's not brand new. It's over a decade old. So when y'all hear those commercials, know that it's cap. It's cap a little bit, right? But offering compromise is a real thing. But everybody doesn't qualify for it. You have to qualify for it. Again, if you make money, if you have assets, if you have equity in your home, a lot of times you're not going to qualify for offering compromise. But there are circumstances where you do qualify for it. Here's the thing, though. A lot of times it's taking north of a year, 12 months, sometimes 18 months to get them approved. So if you're looking to buy a home, get financing for your house, and offering compromise might not be the best way for you in those circumstances. But there are some other things you can do in the interim, and you might be able to come back later and do what's called an offer and compromise. But again, if you're looking to get a job, if you are looking to get a house, you want to make sure you file your taxes now. You want to make sure you are being proactive, right? Don't wait till April 15th to file your taxes. Don't wait till tax season to file your taxes. You want to start being proactive now, not then. For all those reasons I just mentioned, right? If you're looking to buy a house, a lot of times you are going to need to get a mortgage unless you got cash. If you're balling like that, great. Doesn't apply to you. If you need a mortgage, a lot of times they want your tax returns, especially if you are a small business owner. So just be careful not to wait to the last minute. Last thing. This is the other tax season I like to call. This is tax planning time. Don't wait until tax season to try to maximize or reduce your tax bill. Tax planning is the time you do it, typically before December 31st. You don't want to wait till after December 31st to start trying to reduce your tax bill. You want to do it now. Were there tax laws that you could possibly take advantage of? Remember that the tax code is the cheat code. You've heard me and my sister Courtney talk about that all the time. My tax sister, that is. Tax code is a cheat code. If you follow the law, it can help you enrich yourself. Right? If you follow the law, it can help you stay out of trouble. But you want to start doing those things and work in practice now. You want to put them in play now. If you have a business, if you have a rental property business, or you have rental property, you want to look to see what deductions you can take now. You want to see how that all fits into play. You want to make sure also, real quick, this came to mind, for my real estate investors, make sure you're taking depreciation. I'm not going to go through it today, but I've seen a boatload of real estate investor tax returns where they don't take depreciation. Depreciation is probably your biggest tax deduction that a lot of people are missing out on because they don't report it. So make sure that you file for your depreciation if you own real estate for investment purposes. Make sure you do that. All right. And so again, tax planning season, this tax season, right after the tax filing season is so important. Don't wait until next year to say, oh, I need a new car, not the G-Wagon, y'all, but I need a real car for my business. This could potentially be a write-off. Or, you know what, I do use my car in my business. I should be recording my mileage. Or, there's another way, again, go watch that latest video on car and truck expenses. If you do actual expenses with your vehicle, you're tracking them. I have so many, again, business owners who don't log their miles, who don't track their receipts. Guess what happens if an IRS audit comes and they see you use your car and your business? They look at that They look at your mileage log. They're expecting you to have a mileage log. They're expecting you to have receipts and a tally of those receipts and accounting of those receipts. So again, don't wait till the end, y'all. Don't wait till the end. Now I'm going to stay on a little bit longer if anybody has any questions, right? But last thing, if you need anything from me, if you need help with your taxes, again, I'm Kamari Ellis. You can reach me at Kamari at Philly Tax Team. You can call the office at 482-482-0823. And the website is thephillytaxteam.com. Now, a lot of times when you get to the office, you're probably going to get an assistant that's going to take a message. Just take a message. Just leave a message. Leave your email. Because a lot of times I will email you back because things have been a bit crazy. They've been a bit crazy. Now, if anybody has any questions, I'll stay on for a little bit longer and answer those while we're here today. Now, again, this show is live, but it will also be re-put out on podcast so you can listen when you're traveling, when you're working out. If you want to listen to my voice as you work out, it'll always be good. So again, let's see, do we have any questions? If not, I'm going to go about enjoying my Saturday. Let's see. So I see we got some folks here. Jose is in the building. How you doing, Jose? Let's see. All right, that was when you were telling me the volume was low, but then you can hear it because I turned up the volume. Sonny's in the building. How you doing, Sonny? How you been? How's your summer coming along? Now, for some of you, I use a platform called StreamYard. There should be a link above the broadcast that can give you have to click on it and get permission for StreamYard to share your identity, share your name, because if not, all I know is Facebook user. I would love to be able to say your name, talk to you, see what's going on. Francesco, how are you? All right, saying you can't hear me. Hopefully y'all can hear me now. All right. Yep, all right. All right, and Sonny was saying, responding to the question I asked, does it seem like it's efficient in the manner that the Internal Revenue is working? This is not at all. All right, Tiffany says, yay. Hola, buongiorno. Hello, everyone. Hello to you as well. Northern Bell's in the building, listening and working. All right, that's what I call multitasking. All right, Self-Made SM says, what are some books to look at the tax code for 2023? I mean, if you want to, it's online. You can just Google tax code. The Cornell Law School has it all there. Look at Title 26. I want to say it's most of it. You can look at it all there. If you look at like Income Taxes for Dummies, those are some good books as well. Trying to think. If you go and read the IRS's publication 17, that will give you a good foundation of taxes just for individuals. So that will be a good place to start. That's what my dad did. He had me read the publication 17. All right. Big Daddy Still Rocks 29. That's a dope name, by the way. Thank you. All right. Sonny says, been a while. Summer's great. We should catch up. Yeah, let's do it. Let's do it. Hopefully it's all as well. All right. So if nobody else has any other questions, I'm going to get on and get out of here. But I'll give you a couple more minutes if you have any other questions. Let me know. Now, as we're waiting, I want to know, what do y'all think about this bill, right? $80 billion just to the IRS. Now, the Inflation Reduction Act has way more parts to it. I'm going to cover those soon. We'll definitely get into the nitty gritty and where I think the opportunity is, either to make money or save money. But for right now, what do you think? All right, Big Daddy, what you got? I don't know if I should be calling another man Big Daddy, except if you're Big Daddy Kane. But what you got, man? What question you got? Hey, Angela, how you doing? Where is Miss Edith? I don't know if she was on today. Now, while we're waiting for the question, listen, do me a favor. I'm only seeing like 2 likes on the YouTubes. So do me a favor. Do me a favor. Like it, comment, and share. All right, like, comment, and share. That's how you let the algorithms know, because everything is algorithm based these days. That's how they know that you all like what's going on. Same thing on the Facebooks. All right, Big Daddy still rocking. It's got a question. Should I use an accountant that is super by the book? It's like he doesn't want to help me save money, it seems like. Well, so all right, so every time I ask questions, he says he has to refer to his references. Um, so that can be tricky, right? It depends. I still refer to the reference. Why? Because the tax code is enormous. Now you'll see some people say the tax code is like 70,000 pages. That's actually not true. What people are referring to when they say the tax code is like 70,000 pages is back code that's no longer in play anymore. So the overall code is about, they're saying about 3,500 to 5,000 pages for current tax code. That's still a lot of pages to go through, right? That's still a lot of things to go through. Like, for example, right now, I have a client who is farming. I've never worked with a farmer before. And for the record, I disclosed that. We might have to bring in someone else who has more expertise in that if I feel like I get out of my wheelhouse. But I like the person, so I'm going to see what we can do, and I'll do the research. So there are times where I have to research. I have to go back and read over things over and over again. Now, again, it's really hard to depend on like what kind of questions that you're asking. And I'm not trying to be funny here. You know, what's your level of comprehension? What's his level of communication, as well as he communicating these things well, right? Is he breaking down to you what a legitimate tax deduction is, right? All tax deductions are not legitimate. I see clients all the time who try to bring things in that are not legitimate. For example, I'll give you a real life example. Have a client who drives Uber, but they deduct meals. Who are they having meals with? Are they for business, or are they just feeding themselves? Because that can be a little bit tricky. I've also had other business owners who, matter of fact, one that comes to mind right now, they have a side hustle or a side business, and they work a 9-to-5 job. They go to McDonald's a lot. $5, $6, $10. It's not a business meeting. They're running through the drive-thru. It's not really a business meeting, but they want to take off those deductions. And I say, no, that's not. That's just you eating. It was not for a business purpose. So it can be a little tricky if he's saying that he has to refer to some things. How much experience does he or she have, right? That kind of goes into play as well. But to go back to your original question, every time I ask the question, he says he has a reference. But you also said, should I use an accountant that is super by the book? Well, I'm by the book. There is some gray there that can navigate for. And if I feel it's legitimate and I can defend against it, right? There's a legitimate rationale. I can substantiate it all. I can take a position. Then yeah, but no, I don't want to try to write off your cat as your dependent. I don't want to try to claim somebody else's kids. I don't want to just make up business deductions and expenses, because again, IRS audits are low, but when they come, they can be heavy, and I want to win. So I want to be prepared, so part of that preparation is not doing anything crazy on a return when you file it in the first place. So just keep that in mind. Just keep that in mind. But if you want a second opinion, if you want me to look over it, just shoot me an email. I'll be more than happy to do that. Just let me know. Just let me know. Any other questions? Any other questions? Now, if you want to be a part of the tax community, make sure you text me at 215-974-0058. 215-974-0058 for those who are not watching in live but are listening later. Any other questions? Any other questions? Just let me know. Let me know. All right, I think y'all might be done with me, so I'm gonna be done with y'all. So listen, I appreciate everyone watching. Remember, nobody ever does anything just by being average. All great people rebel. They rebel against the system. They rebel against being average. They say they want to chart their own path. They want to do their own thing. They also know that there's a risk in that by not being the status quo. But with much is given, much is received. Ooh, I messed that up. When much is required, right, much is given. And so anytime you want to do something great, know that there's a risk reward, right? There's going to be something you have to risk, but a lot of times there's a greater reward on the other side. The question is, in your mind, do you just want to follow everybody else like sheep? Or do you want to go on your own path and rebel and reap the rewards from that? So I appreciate you all. Until the next time, y'all, Kamari Ellis out. Be sure to like, comment the channel on YouTube. Thank you all again. So long.